This is Christopher Lewis from the dailyforex.com trading desk, taking a look at the upcoming March 5th Forex session. In front of you is the dollar yen pair. And as you can see, we've had a fairly parabolic move recently. Certainly most, if not all of you, are aware of this. And we have recently broke above the 80 level. The 80 level was important to me as I zoom out. Perhaps you'll see it on the weekly chart even more so, as it had offered so much support previously and resistance going forward. In fact, a couple of the candles down here were weekly candles that featured Bank of Japan intervention. Having said that, it does show how much force was behind this move as we slice through it in relatively short order. And also, while I'm zoomed out, I'll take a look and go ahead and mention this trend line here. This is a trend line that's been in place since September of 2007. Why is that important? That was essentially when we really started to feel serious issues in the housing crisis. So this downtrend line is massive in its scope. We have broken free of that, and that's not something you see every day. As I zoom back in, you can see that the recent action has seen not only a breaking of the trend line, we fell back, tested it with a hammer and went higher, and then we've fallen back to the 80, tested it with a doji, almost a hammer, and have shot forward. And the fact that we keep breaking new highs is rather incredible, as it shows real momentum in this pair, even though we've gone so far so quick. The Bank of Japan announcing an expansion of its bond buying program should flood the market with yen, so this will continue to put upward pressure on this pair. As long as we can stay above the 80 mark, I'm convinced that we are looking at a potential trend change, and in fact really have started to see the beginning of it. The 85 level will be the next level that offers significant resistance going forward, and between now and then I plan on taking this pair and buying it on dips, on short-term dips, as it will undoubtedly chop higher. As long as we're above 80 and as long as we're above this trend line, there are many reasons to be long. Also, you have the added benefit of although the yen was certainly the safety trade for the long time, the dollar still is as well. If you look at the yen against many other currencies, it's falling against them as well. This is truly an anti-yen move. With this being said, I look at this as the beginning of the end of the downtrend in the dollar yen. Where we end up, who knows, but looking out at longer term charts, you can see that a candidate for this can be found at 95, which would be the 100% retrace of the latest downsurge. And it should be noticed that the 85 level, the next level that I suspect will offer resistance, is the 50% retrace of that. If we get past that, there is a good chance that we may eventually see parity, although with all things Forex, and certainly when you're talking about trend changes, it'll be a choppy ride on the way up there. My strategy is to be very patient, add when I can, and continue to ride this higher. If we get a daily close well below the 80 mark, my thesis is blown, and then I have to reassess the pair.